I am now here with Vice President of Insurance Services, Adam Falkauff, and Senior Vice President of Insurance, Rich Schrieber. Thank you guys for joining us today.
Thanks for having us.
So how has your real-world experience been so far? What are you guys looking forward to the most?
Well, it's obviously just gotten underway being Sunday, but we're really excited about talking with our clients, showing them the great deliveries that we've given to them, their residents over the last year, introducing our new product set that we have after the lease term solutions acquisition, and showing how we can help to drive efficiencies at their sites.
Good. So can you speak to a little bit about the recent launch of RealPage Insurance?
Is that me? Okay. Sure. We are very excited about RealPage Insurance, and what that refers to is the entire product suite that we now have available to us. Of course, we still have the e-renter plan, which is our core product and the one we lead with and recommend for most of our customers. But now with the lease term acquisition, we have a few additional products. We call our insurance offering Asset Protect. There's some really unique features of that. We can get 100% coverage of all units within 12 to 15 months. We generate a lot of ancillary income. We have very consistent coverage for all communities in all markets. So there's quite a few interesting things we do. We also operate captives, and captives are applicable to larger owners and managers, and achieve some advantages for them as far as revenue and risk management.
Cool. So you guys have a session coming up on Tuesday?
We actually have 3 sessions.
Oh, 3 sessions.
It's going to be crazy with insurance here.
So what can attendees expect from some of those sessions that you guys have?
So the first one is about how we've been leveraging our integrations, automation, to get more of their residents insured, and take away that burden on the site staff to get those people insured and keep them insured. The other session is about all of the solutions, a little deeper dive into what Rich spoke of a few minutes ago. E-renter plan, Asset Protect, which we're really trying to introduce to our client base, and then we'll talk a bit about captives as well. And then our third session is really about the deposit alternative space, right? It's been standard to require a deposit, and now there's a lot of entrants providing different options to satisfy that deposit.
So Asset Protect is disrupting the insurance industry. So can you tell us a little bit why this is so?
Sure. The industry for the past 20 years has mostly been focused on using an HO4 policy, typically called a renter's insurance policy, to satisfy the requirement for residents to have insurance. There's been a few issues with that. One of the major issues is that not all residents, even though they're required to have insurance, will maintain their insurance. And so residents can get lost, and that leaves the owners and managers exposed. So what we do with the Asset Protect offering is we use a commercial policy to essentially blanket all communities. Our focus is more on the owner's bricks and sticks. As I mentioned, it's a very uniform policy. It's very low cost. It generates the ancillary revenue and has the participation up to 100%. So we've found that that's particularly attractive now, and for owners that do not want to use the typical HO4, then have this option to satisfy their risk strategy.
So do you guys have any recommendations related to helping business owners safeguard from risk?
Yeah, I mean, it's now commonplace to require residents to have insurance. I think that's almost across the board at any conventional open rate community. But doing it is not always easy, right? There's benefits. It saves, according to our studies, about $32 a year per unit, because those owners don't have to tap into their policies, come out of pocket for big deductibles, and be susceptible to rising premiums, right? We all know, we've all got cars, and we know that if you get in a bunch of accidents, well, the price of insurance is going to go up. The same thing holds true at your community. So we help them to do that in a really seamless way and ensure they have that first layer of protection.
And so then why should communities require residents to have insurance?
Again, it's that $32 a year, but in addition to the savings from tapping into their insurance, there's a huge opportunity to drive ancillary revenue. So Rich spoke about that before. This can be another profit center for a management company.
So thank you guys so much for joining us today.